Welcome back to Vantage. We have been touring the emerging markets. We did Vietnam a couple of weeks back. We're going to take a look at the region on a slightly broader basis. Let's go take a look. Welcome back to Vantage. A couple of weeks ago, I was talking about the fact that we're starting to see a pickup in interest in emerging markets. Delighted to have another Asian manager join us, the Aberdeen Asian Income Fund. Isaac, welcome to Vantage. Isaac, you have recently taken on the helm at Aberdeen Asia Income Fund as the lead manager. Maybe you can share a little bit about yourself, your style, but also tell us a little bit about the fund itself.
Sure. My name is Isaac. I have been investing in emerging markets in Asia for the last 15 years.
Okay.
It has been a fun ride, and a lot of that portion of my career was spent in both Asia, in Singapore, and in Europe, in London. So that diverse experience has really given me a lot of exposure to different styles of investing, different approaches. And what that has done for me is it's really enabled me to take a very philosophical approach when it comes to investing in Asia, as well as a very on-the-ground approach when constructing portfolios. So I like to marry those two approaches, and that's really core to the way I invest. Personally, I am Singaporean. Right? I was born and raised in Singapore. I experienced firsthand that tremendous transformative growth in Asia. And I think I've been a beneficiary of that, and I'm very grateful. So when I look at Asian markets, I really have that natural competitive advantage, and also that natural leaning, and I really approach the Asian markets in a spirit of excitement.
Okay, and tell us, for those people who don't know about the income fund, and actually we'll come and talk about income in a bit, because they might necessarily, the UK is a dividend market, but they may not appreciate Asia. Tell us a little bit about, as you've come to take over the fund, what you see, the size, the number of holdings, etc. What is it that you've inherited?
Yeah, so I inherited a great fund, and I think style-wise, it's going to remain exactly the same. So think about what we want to achieve. What we want to achieve is quality and income. So when you look at the style attributes of the fund, high quality versus the benchmark, and by quality I mean high returns on equity. We are higher ROEs versus the benchmark, right? And that's going to stay quite consistent. And when it comes to income, we want to deliver a higher dividend yield versus the benchmark, and that factor is going to remain the same as well. And I think more importantly, why do we want quality income? And I think this is really important, because our strategy is really anchored on the fact that, on the belief that there is tremendous growth opportunity in Asia. So you look at GDP growth globally, Asia has and will continue to drive over half of global GDP growth. Growth comes very naturally in Asia for a bunch of factors, things like demographic dividend, things like technology catch-up, high savings rates. That really plays into the whole growth environment. But I think what's not mentioned enough is that strong economic growth has in the past 20 years really translated to strong total shareholder return. So you've seen strong economic growth translate to strong earnings growth at the corporate level, and that drives shareholder return over the long run. But I think in the last 5 to 7 years, that story has been somewhat forgotten, right? Because of the rise of U.S. exceptionalism, Magnificent Seven, all these great companies. But we think that a lot of that has played out and is really in the price. So, given the current state of affairs, it's probably fair to say that spotlight might just shift back in the direction of Asia.
Okay. I mean, I was going to ask you about Asia, as to why Asia. I think you've covered off quite a lot of it. So let me summarize it. Okay, so demographics, the industrialization, the growth of the consumer, you've sort of touched on, technology, all of these things are leading to this market, producing sort of growth. One of the things I wanted to understand about Asia is this, when you look at Asian companies, some of them are sort of family-led, etc. These are sort of listed vehicles or founder-led businesses. Is there anything that people should be aware of in terms of the structure of the Asian market that's different to, say, investing in the US or Europe, or is it something that you think actually this is something you should be aware of?
I think that's a great question, and that really ties into why income as a strategy, in particular why quality income is the right approach to take in Asia, right? So we have all this growth in Asia that's quite naturally occurring, like you alluded to, but we think that growth in Asia really comes along with a wider range of outcomes. So we like to give this analogy of driving a car down a highway, right? So imagine you're driving a car down the highway, you want to go home, but unlike the highways here, that road is windy, right?
Yeah.
And the problem is your car can only go fast because you're a growth car from Asia, you're driving a BYD, right? It can only go fast, and you really want to get home in one piece. So you want to make sure that your car has the right set of brakes, a functioning airbag, and good GPS to get you home. And that's essentially what the trust is trying to do for you. So we want to narrow in that range of outcomes by investing in high quality dividend franchises in and around Asia. And if you were to ask us, how about do you go doing that, right? The answer would be, we look for three things in companies, right? The first thing we look at is we want to invest in high quality businesses that are able to deliver strong returns on equity over and above their cost of equity over long periods of time. All right. And secondly, these companies should be able to generate very strong free cash flow. And then last but not least, we follow these cash flows into strong dividend policies. So dividend policies to us is a form of corporate governance. And what it really does is it really pulls in that range of outcomes that we see in Asia, because like you say, there are a lot of family-run corporations in Asia that sometimes are not run in the best interest of minority shareholders, right? And then I think what's not often said is there are all these fast-growing Asian companies, but don't forget that some of these companies are quite young, right? They've only been around for 20 years. They're teenagers, and like all teenagers, you need to set some guardrails in place to make sure that growth really comes through. Right? So that's how we look at companies. That's how we do things for the fund.
And I started by saying there's a lot of people who may not be aware of the income potential of Asia. I'm sure. I mean, how does it benchmark when you're looking at yields or the dividend yield that's being generated out of Asian companies against other regions? What does it look like?
Yeah. So I think before we get into that, after we found these high quality dividend franchises, what we want to do is to invest across a range of dividend yields. So not just high yielding, not just low yielding. We want to harness Asia's potential in a very balanced way. We look at things in terms of total returns, right, which is typically earnings growth plus dividend yield, right? So, but to your point, the average dividend yield in Asia right now is about 2.7%, right? If you look globally, that number is about 1.8%. So there's a substantial yield enhancement or income enhancement when you invest in a place like Asia. And then on top of that, you get that growth as well. So in Asia, you could technically have your cake and eat it when it comes to income because of those high base rates when it comes to growth.
So, I mean, you've outlined the attributes you're looking for companies. So, good quality companies, high returns, free cash flow generation, right kind of corporate governance, and that sort of brings things into the portfolio. How many companies do you currently have in the portfolio? And maybe you can talk a little bit about the kinds of companies that are in there.
Yeah, we have, as it stands, we have just north of 50 companies in the portfolio. We tend to hold anything between 50 to 70 companies, depending on opportunity. And we have various different types of companies. Like I say, we want to capture the whole range of opportunity in Asia. Companies that are growing, companies that are maturing, and that's totally fine to us. We are quite agnostic. We look at things on a total returns basis. So let me give you two examples, right? So when we invest in companies that are lower yielding, what we need is strong not strong, but high sustainable earnings growth.
Yeah.
Right. So a company like Tencent, for example, which
Yeah.
is it's a fast-growing internet platform in China. It's kind of like the WhatsApp plus Facebook of China, and it's
Yeah.
also a leading games developer in China. So we think that Tencent can compound earnings over the next 3-5 years at about 10-11%, right? But its dividend yield is only just north of 1%.
Okay.
So it's a fast grower, low yielder, but we think it's high quality,
Yeah.
right?
Yeah.
And then on the flip side, we also invest in a DBS Bank, which is the leading bank in Singapore,
Yeah.
possibly the highest quality bank in Singapore with very strong deposit franchise. But the thing is, DBS is based in Singapore. It's a more mature market,
Yeah.
right? So it's not going to grow as fast as Tencent, probably single-digit sort of earnings growth rate, but its dividend yield is just south of 7%.
Okay.
So when you look at both companies, which are quality franchises, you look at it in terms of total returns, then they start to look, quite similar,
Yeah.
right? Yeah.
Okay, and now I guess the next sort of part of it is that you've taken on the helm. Now, why Aberdeen, right? So people are looking at Asia, etc. Why take a look at Aberdeen? What does Aberdeen bring in terms of investing in Asia? I mean, there's a rich heritage, I guess, that Aberdeen's already had. But what do you see as this sort of competitive advantage that you bring on this platform?
Right. So it really ties into what we're trying to do for the investment, for the income trust.
Yeah.
Right. We want to achieve quality first, and then income second, or quality first and valuations second.
Yeah.
And those are the style tilts where it comes to the trust. And I think when it comes to identifying high quality dividend franchises or high quality, which starts off as high quality businesses, I think Aberdeen is a very natural home for what we're trying to achieve, right? We have 40 investment professionals on the ground in Asia,
Yeah.
right? And that's tremendously important because things in Asia change very quickly. Today's winners might be tomorrow's losers because competitive intensity in parts of Asia are really strong. I mean, take China for example. They've been very keen on pushing sectors such as solar sector, and that has really ended up with a lot of competition, and that has caused pain in certain part of the supply chain.
Yeah.
Right. So things move really quickly, and competition is a factor in Asia that really skews the range of outcomes. So you want to be on the ground. We have 40 investment professionals, like I say, that are on the ground, and the process at Aberdeen when it comes to identifying stocks is very quality focused. That process was started in 1987,
Yeah.
right? And it has been refined over the many decades into what we have today. And I think I'm myself and my co-manager we're both very fortunate to have the backing of such a strong team.
Okay.
Yeah.
Okay. Great. And I guess to round this out, I mean, you touched on U.S. exceptionalism, Asia coming back.
Mm-hmm.
How would you sort of pitch the Asia Pacific region and say, what sets it up in today's environment? So a volatile environment, tariffs, a little bit of geopolitical uncertainty. What sets out the Asia Pacific region today compared to the rest of the world?
I could think of 3 factors.
Yeah.
Maybe with additional one, so 4 factors, right? If you look at Asia today, I would summarize the opportunity by saying Asia is undervalued and underappreciated.
Okay.
Right? So if you look at things like valuation spreads, if you look at the PE valuations of Asia Pacific versus that of the world, you would see that difference in PE valuations is the widest it has been in over a decade.
Okay.
Right? So
Yeah.
Asia is cheap
Yeah.
when it comes to valuations. And then if you look at earnings power in the form of returns on equity, Asia is just emerging from the COVID. We're just getting back to where we were
Okay.
pre-COVID.
Yeah.
We're just seeing the light of day, and we are poised to grow off that number. Right? But if you look at global, you look at the world, especially the U.S., earnings power is marking all-time highs, right? And for good reason, because of these great companies that they have there. But the thing is, they're marking all-time highs, and that's priced into the valuations already.
Yeah.
So I think Asia's coming from a very healthy place, right?
Yeah.
So that's the first point. The second point would be we're seeing a lot of positive policy tailwinds, right? So China has gone through 4 very tough years, right? It started with very tight policy making, right? There was some streamlining when it comes to different businesses in China. And the good news is that those strict policies have been gradually unwinding over the last 4 years. And China is not like the US where things are done very quickly. China's approach is trickle-down economics, right? So a gradual unwind.
Yeah.
We've seen 4 years of that, right? And I think right now the opportunities are quite interesting. Yeah.
Okay. Isaac, I mean, first time on Vantage. Thank you very much. I think you've given a really good sort of rounded overview of the income fund and the opportunity in Asia. My understanding is that you're heading back to Singapore.
Yeah.
We might break new grounds by visiting you there in 6 months or 9 months' time to see how it's going.
Yep.
So we look forward to staying in touch with you,
Yes.
and I hope you can come back on the show.
I will, please do. Thank you.
Thank you very
Yeah.
much.